Good morning, everyone. This is T3 Live Editor-in-Chief John Darcy here to bring you the morning call. So we come in here this morning, S&P futures are down 6 or 7 handles. Yesterday we were able to find our footing a little bit after some warning signs on Thursday. We had some weakness in various sectors, the Russell 2000, the home builders, the transports, but like I said yesterday, we were able to close off our lows, stem the tide of some of that selling, and basically make that Thursday sell-off amount to nothing because we held our 8-day moving average. Any rally that's holding its 8-day moving average is very healthy. But this morning, like I said, futures are down, and it's largely the result of a couple things that we saw in Asia overnight as Asian markets were weak. In particular, in Japan, the Nikkei finished down almost 3% after some CPI numbers came in a little bit hotter than expected. And people are perceiving that as the Bank of Japan might have to slow down their easing a little bit, become a little bit less accommodative. And I think in U.S. markets, people are seeing that hot CPI from Japan perhaps as a preview of what could come in the U.S. The thing with the Fed in the U.S. and quantitative easing is that I think at this point, the Fed probably expected inflation to be a little bit higher, and they actually want inflation to be a little bit higher. As part of their goal with quantitative easing is to establish inflation expectations and maintain a nice steady inflation growth. But so far, inflation has stayed muted, so the Fed hasn't really had any reason, and they've been a little bit worried, in fact, about perhaps pulling back on QE due to the fact that inflation has been low. But what they say about inflation is that it's like a glass ketchup bottle. So if you ever go to a diner and you have that glass ketchup bottle, you got your French fries, and you're trying to get the ketchup out. It won't come, it won't come, it won't come. And you're like, what's going on here? I can't get the ketchup out. And then finally, you smack it once hard, all the ketchup comes flying out on your plate, and you got a plate full of ketchup with a few fries sprinkled in. That's what they say about inflation. And you might be seeing a little bit of that in Japan, and it sparked fears that we could get a similar type of situation in the U.S. So that was the reason the Nikkei was down 3%, why you have a little bit of jitters pre-market in U.S. markets. Because if we do get some higher inflation numbers in the next 2 CPI readings in the U.S., it could change the game a little bit with the tack the Fed takes in that September rate decision. There's not anything expected to happen in the August rate decision, so I think that'll sort of be a ho-hum type announcement that the Fed's not really going to change their rhetoric at all. But that September announcement, like I've been talking about, is going to be very important, especially if you see inflation numbers from various countries, and especially here in the U.S., match what we saw with that CPI overnight in Japan. It could change things up a little bit. So that's something to keep an eye on, and those are the macro forces that are driving the market this morning. Last night we had another group of earnings. Some interesting moves going on. Amazon was obviously the headliner. Before I get into that, though, I'll give you a visual of the S&P. There's not much to show, but I might as well do it. We go to the chart. You can see the SPX right here. The S&P held its 8-day moving average yesterday, closing off the lows. This uptrend is still intact. This accelerated uptrend, sort of got breached on that Thursday sell-off, and you're seeing futures respond and come back down again this morning. The short-term pivot people will be watching is yesterday's low. But if you're not an ultra short-term person, nothing really to raise a red flag at this point. The market's still healthy. Summer Friday, late July, talking about the epitome of a day that could be slow and lethargic. This is it. There could be some jitters from that big sell-off in Japan and those CPI numbers, but I don't anticipate a very active session today. But going back to Amazon, reported earnings last night, and almost it seems every quarter Amazon comes out, reports sort of mediocre earnings. Everybody on Twitter and in the blogosphere hurls insults and the jokes about, oh, were these Amazon results bad enough that the stock's going to be up 10%, Amazon just seems to get a pass every earnings season despite the fact the company doesn't really make money. They do spend a lot on the future, and the growth stories with Amazon are down the road. They've spent a lot of money to get more into the online streaming media business, as I would consider them one of the main competitors to Netflix. So they're spending heavily there. Obviously, their cloud infrastructure business and data storage, that's a big component of their business. They're expecting huge growth in the future. And investors and institutions and everything seem to still believe in that Amazon story, despite the fact that earnings continue to be mediocre. But Amazon's down only very slightly this morning. Last night it ticked down big immediately after the announcement, but snapped all the way back and is only down a few points. Go ahead and take a look at the chart of Amazon. I'll see if I can get a look at the pre-market action for you. Amazon. It's in yesterday's range, I know, pre-market today. It was weak the few days heading into the report, and then yesterday, the day prior to the report, it was able to surge back above its 8-day moving average. It remains a market leader despite the fact that the company doesn't make a lot of money again. Just to repeat that point, we look at the 24-hour here as we can see it. as you can see, sort of if I move this over, last night immediately after the report, you got the headline numbers and some algos probably scanned those headline numbers, big drop in Amazon, but it immediately snapped back, bounced around in range, had a little bit of a drop a little later, but it's continued to sort of drift higher pre-market today. As you can see, it's about at the 298.50 level, so obviously nothing to be concerned about if you're an Amazon investor, and it seems to have gotten another pass from Wall Street on this earnings report. But one thing that didn't get a pass was Zynga last night, and Zynga ticked higher yesterday on that Facebook news. Facebook and Zynga are very closely related. The success of Zynga is dependent on traffic to Facebook and this and that, and the Facebook earnings report showed a huge growth in daily active users, which is perceived as a benefit for Zynga, but the company just hasn't been able to capitalize on it and seems to have really deep-seated issues that I don't know if they're going to be able to get resolved. Zynga down about 18% this morning. We take a look at the chart. Like I said, it was able to surge yesterday on that Facebook news, but did close well off its highs as there was perhaps some skepticism about whether they would be able to match those positive results from Facebook. We'll go to the 5-minute, 24-hour here on Zynga as well. It's down to the 290 area, so we'll go back and look at the daily chart. 290 is back down here, sort of in this lower level area that it ignited from back in late June, early July. So it'll be very interesting to see whether it can hold this sort of a support area here, as you can see this previous level. But I think ultimately people will, if it gets more weakness during the session after today's gap down, this 250 low is obviously the level that people are going to be watching. So Zynga, it's not one I've ever really been sold on. It's one of those with a big short float that could potentially squeeze, and it's a low price stock, so you could get big percentage moves. And off that 250 low, you did get a great percentage move up to 360. So there could be opportunities there. It's not my cup of tea, and I think there's a lot of risk there, like there's a lot of opportunity. So you have to be careful with those. I know Mark Sperling's been eyeing this trade and trying to play a bounce in Zynga, and it's been a little bit difficult. The company, like I said, just has very deep-seated issues. They have a new executive they hired from Microsoft. People are very optimistic about, and everything I've read about him is very positive. So perhaps in the future you could see someone like that. You've seen someone like Marissa Mayer come over to Yahoo and really turn things around with that company. Maybe somebody well-respected like the guy who came from Microsoft for Zynga could help turn it around, but so far the earnings report shows that there's really big problems with Zynga that don't look like they're going to be solved anytime soon. Staying in the video game group, Activision had big news overnight as the video game company announced that they are going to buy back shares from Vivendi, which is a large video game publisher. Activision is looking to become more of an independent type shop again, maybe reclaim some of the creativity that made them what they are. And the stock has responded very positively to that announcement of the buyback of shares from basically what was Vivendi, who had a big stake in the company. I believe Activision is up about 18% or something. We'll take a look at the chart. ATVI. You can see, this is not a stock that we watch or look at often, but showed some strength this year. Big move in February, March for Activision. And then we'll take a look at the pre-market here. It closed yesterday at 15.18. This morning it's off its pre-market highs. It hit as high as 19. The initial enthusiasm on that announcement, but now it's back around 17.65. So nice healthy move. I'm not going to calculate the percentages in my head, but really nice healthy move that'll take it above this resistance area. Obviously, you can even go on the monthly, see where that takes us. Yeah, huge resistance area it's clearing here on this nice flag after the eruption in early 2013, or the igniting bar. And the only thing now in the way, it actually, let's see where the high of this is, 1928. So it almost touched what looked to be all-time highs. I'll zoom out to confirm that. Yeah, all-time highs, it looks like in Activision pre-market last night after that announcement. So something to watch. Activision, positive news on that share buyback from Vivendi. Could be active today. Some active traders could be watching it for volatility due to the fact that it could be a quiet session. It's going to be very stock-specific type of tape. Another earnings report last night was Cliff Natural Resources, CLF, iron ore company that a lot of people have been following Cliff, looking for a potential bounce due to the fact that it's one of those stocks with a huge short float interest, or huge short float, high short interest, around 30%, in excess of 30% actually. And the company so far has shown that you've had a company like Cliff Natural Resources is over leveraged in a commodity industry that is suffering right now. and due to that, there's multiple pressures on the stock. But the last two earnings reports, Cliff has basically shown some immunity and the ability to weather the storm in commodities markets, despite the fact that they are highly levered. And this earnings report was positive again. We'll go to the 5-minute, 24-hour of that. It's around 19.25. I think it's up around 5% this morning. So very interesting to see whether Cliff Natural Resources can build on this gap. There's been several times when Cliff has gapped up or made a big move. You know, last earnings report had an even more positive response. If we go back, you know, it was down here in the $18 area, gapped up, filled a little bit of that gap, but then was able to surge all the way to the $24 area. Nice percentage move if you were playing it off the lows around here, but it fell back down into those lows, and the gap up is going to be smaller this morning, but sometimes it doesn't have commitment to bounces, as some of these highly shorted stocks can be a little bit tricky. But if it does get going, if it does get momentum, it could go fast, it could go far, so definitely want to keep an eye on. I know people in the virtual trading floor have been watching it closely. Another one that reported last night and delivered a really disappointing report is Expedia. These new travel sites have had tremendous runs in the market. I don't know a lot of the fundamentals behind them, but they've been able to consistently beat estimates and have really nice growth. But last night Expedia delivered a very disappointing report and is down big this morning. I think it's down, last time I checked, around 23%, which is a huge move. And we'll take a look at the levels by going to the 24-hour pre-market. It's down here below 50 at 49.80, not showing really any signs of life pre-market. We go back to the daily chart. Look at that move. It's not even in our screen right now, that $50 price point. So far this year, it bounced from about the $55 area up to 65, but now all the way down to 50. We'll have to zoom out to a weekly chart to even get a picture of that. So you're all the way down here, levels you haven't seen since those November lows for the market in late 2012. So this will be a very interesting area to see if Expedia can hold this support area, which it's below at pre-market. It's below 50. So the next area you might see come into play isn't until around 45, 44, it looks like. So Expedia, very broken chart. Unless it can somehow miraculously erase most of the gap this morning, which I don't anticipate it will, this will be what we consider a broken chart, one that will take a lot of time to reprove itself and create a new base. But overall, broken chart, one that maybe will be providing opportunities for short-term cash flow type traders, momentum traders like Mike Lee and Steve LeVay. Maybe they'll watch a name like this for potential volatility, but overall, if you're looking for swing trading ideas, this is certainly not one that I would blindly buy. I don't believe you should blindly buy anything on a big gap down, but this sector, this stock in particular. And we can take a look at Priceline. That it's a very similar company. The stock moves in concert with Expedia oftentimes. They both react to each other's earnings, and Priceline closed at 9.12 yesterday. Take a look at the 24-hour on that to see where it is this morning. It's down here around 886. It actually hit lows below 875, down near 870 last night, but has it been able to bounce a little bit, as maybe they hope that some of the reasons for Expedia's poor report aren't going to affect Priceline's earnings as well. But a big drop in Priceline as a result of those Expedia earnings. So another thing to keep an eye on to see if that gets a little bit more downside follow through today as people respond to those weak Expedia earnings. And quickly we'll go through the two stocks that we talked about yesterday after their earnings. Facebook, I know it was down a little bit pre-market yesterday. Huge gap up, almost a 30% gain by the end of the day. It was a gap and go. Closed a little off its highs, but really, really healthy action. We'll go to the 24-hour chart here. It's down below 34. It's at 34.90. So it's obviously down, or down at 33.90. So it's down a little bit this morning, basically in the middle of yesterday's body of the candlestick. Obviously, no cause for concern there. A new base will be important for Facebook. If Facebook can build a new upper-level base, I believe it could get back to that IPO price sooner rather than later. That earnings, the percentage of revenue that came from their mobile ads jumped from 26% to 41% in that earnings report. That's a huge number. That's a number that's going to convince Wall Street, a lot of portfolio managers, hedge funds, that Facebook has turned the corner, really figured things out. And I think this will get back to the IPO price, like I said. Rather than look to fade this stock, I think you look for a base to build. It's hard to chase it, and you're probably going to be kicking yourself for not taking the opportunity to buy Facebook when it was down below $20 a share. Obviously, it's such a heavily used social media platform, but the fundamental story wasn't there, and the stock wasn't acting well either, so there wasn't really a lot in play with Facebook to make you expect this big earnings report that they came out with. But that earnings report sort of came out of left field, triggered this big move, and now you sort of have to put the past behind you and look to the future. And I think Facebook has a much brighter future based on the fact that it appears they've figured out mobile advertising. So very positive for that. Baidu is actually up a little bit this morning. Last time I checked, closed yesterday at 125.85. This morning it's up above 126, so maybe that'll get a little bit more juice today. Obviously it's not a huge move pre-market, but the Chinese internet stocks have been strong over the last few weeks. Baidu's been the leader, so maybe you could get some juice from that today, but it probably will be a quiet session, so I wouldn't expect too much. Commodities are down a little bit this morning. Metals, SLV, is down a little bit pre-market, weaker than gold. We'll go to the 24-hour on that one. It closed at 1950 yesterday. It's down to 1926, so a little drop this morning in SLV, and we'll go ahead and just go to the 24-hour gold too. Gold down around 127.89, so we go to the daily chart of that. Obviously not a big move. The low of this candle here is 126.87, so still in that upper level base. I talked about the potential for a gap fill from this previous macro breakdown level. We basically got that, so right now I think you'll see some choppy type of action in gold, nothing really compelling until that September Fed rate decision. Maybe you'll get some movement in it during the August rate decision, but I think the September one is the one everybody's looking for to be a big catalyst for precious metals, for commodities, and for stocks, obviously. So that's basically it. We talked a little about the macro drivers. The Japan issues are weighing on the broader market. Be interesting to see whether U.S. markets show a little bit more anxiety over that CPI number and perhaps anticipate a little bit hotter CPI and inflation in the U.S. And how that could affect the Fed's thinking going into that September rate decision. And then besides that, it's a very stock-specific tape right now based on earnings, which it often is during earnings season, especially during summer earnings season, when the broader market's a little bit light, a little bit choppy. The stocks that have reported earnings recently are the ones that usually move. So short-term guys that are around today, you'll probably see a lot of guys take the day off as it's been a little bit lethargic, choppy type action. But the guys that are sitting in front of their computers will probably just trade the open, and they'll probably focus heavily on stocks that recently reported earnings because that's where the volatility is going to be. If you don't have a ton of A-plus ideas, go out and enjoy the day. I think it's supposed to be decent weather. It cooled down a little bit yesterday in New York, which was a welcome sight. So I'm not sweating here in the morning call, but this has been John Darcy here for your Friday morning call, and we'll see you back here for the recap.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.